Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 22nd, 2012. Lots to talk about, so let's get started. I'm a little bit groggy this morning. I do apologize. It is 5:30 a.m., but I want to try and get this video or this weekly video out to you guys as soon as I possibly can. All right, lots of not weird things, but a lot of action this week simply because it is options expiration week. Options expires today, but the last time you were able to execute and or trade an option contract was yesterday. So basically, a lot of institutions will have game playing, and when you have manipulation in the market, most of the manipulation comes on the third week of every month, which is the third Friday, or happens to be the same week on the third Friday with the third Friday. That options happens to expire. Now, this was a quadruple witching option expiration, which means all sorts of options, everything was expiring today and or yesterday, and that put a lot more pressure and a lot more volatility and a lot more predictability on this type of or this week where we would have options expiration. Now, let me give you an example of, well, let me first start with this chart here, which is the SPY. This chart is SPY, and if you don't know already, it tracks the S&P 500. Okay, it's an ETF that tracks the S&P 500. Let's kind of take a look at what the SPY or what the charts are telling us, and then after that, I will tell you what I think. Okay, so right now, we have been in this rising wedge here, and again, you guys have probably been following my previous videos, so you guys are pretty much aware of what I'm going to talk about. I'm not going to go dig too much of in a recap, simply because I don't want to continue to talk and make this video longer than it should be. Okay, so in essence, we have this rising wedge pattern here, and I said it's unusual to see any breakout of a rising wedge. Normally in a rising wedge you would have a breakdown, right? Everybody knows that when you have a rising wedge, we're gonna trade in this wedge, and when we get smaller and smaller, we eventually break down. And the breakdown, what I do, and a lot of people do not do this, so this is one of the rare occasions that you're going to see a technical analysis trader like myself trade the way I do, especially with these mathematically calculated levels here. You're never going to see anybody else with these levels as well. But what I do with rising wedges and or wedges and triangles and channels, I grab the middle of the channel, the first pivot that's in the middle, and that is my predicted price, so that would end up right around there. Okay, so that's how much I expect at the very minimum for this to drop, okay, on any wedge pattern. So let me back up over here and take a look at this. So if we do drop, or sorry, if we did not break out from this area here and we did drop, then I would pick the middle, which is here, okay, and because this is the middle pivot here, okay, with this doji candle there, and I'd bring it out to wherever it breaks out, and that's where price, I do predict it to at least go at very minimum. Okay, all right, so now I've talked in the previous videos, if you do break out of the rising type pattern, whether it's a triangle or wedge or flag or whatever, what you'll see is normally the pattern will fail. Any type of pattern, bullish consolidation and stuff like that, you will normally see it fail. The only reason why I was shying away from saying that this would fail, and I did mention this in the previous video that a lot of times it would fail, the only reason why I would think that it may not is simply because of QE3. Federal manipulation is the most powerful indicator, if you want to use it as an indicator, that I've ever seen. I mean, I've seen them float markets forever, and then I see a crash after that. But predicting when the crash is going to happen is probably more difficult when you have manipulation in the market. So simply put, when we had QE3, we had this big pop over here, right? QE3 gave us that boost, and then from there we created this shooting star candle. Let me just zoom in here. We created the shooting star candle here. The volume wasn't all that great, so price was not validated, meaning this price up here was not validated, okay, because the volume wasn't there to support it. And then we started floating back down. Now, this wasn't a big drop, this was just a float down, okay, and then this could still potentially be a bullish pattern. Okay, Now, I did say in the previous video, and I still stand by what I say in the previous video. Simply put, with federal manipulation, our support lines are going to be a lot stronger than our resistance lines, okay? So we went right into this 147.05 mathematically calculated level. We had an intraday pullback here almost to the penny. Okay, we talked about that. We broke through, but we never did confirm. Okay, confirmation is something that I like to use. All right, and we never did confirm. We created this shooting star candle, and then we just started floating down. We kind of bounced off of this 147.05 intraday, and then now we just kind of bounced down. I'm not bounced down. We kind of just bled out very slowly. Now, this upper trend line here, I gave you guys a few support areas. The first support area was this upper trend line here. I said if the Feds are going to be strong, and this is one way to see if how strong they're going to be, they're going to save it at this point here. Normally, when you break out of any rising pattern here, this upper trend line here will not be very strong support, simply because the pattern always, or not always, but 90% of the time will break down, okay, when you have this kind of pattern. Now, with the federal manipulation, you just don't know, right? So we did get that save on Thursday, where we bounced off of this, and I'll show you on the intraday chart, but we bounced off of this upper trend line here. That told me that day on Thursday that the Feds have jumped back in, and with the manipulation in the market, being that this week was or this past week was the week of options expiration. That showed a little bit strength, but we still could not close above this 147.05, and I was looking to see if we could at least close above the 147.05 and then ultimately close above this candle here. All right, but we were unable to do that, and on Friday we had intraday sell off on the last few hours, or 10-minute candles, I should say, and we've broken down from this upper trend line here on the intraday. Okay, so let me switch to the intraday, but before I do that, I just want to make it clear that from this, I'm just trying to make this as exact as I can. Get this trend line, because this is very important. Okay, this is on top of the candle here. You see how it's kind of cutting through that candle there? So I could technically bring this a little higher, but I won't. What I want to do is make this as conservative as possible. So I'm going to cut through this candle here, and then just tag the very tip of this candle here, which is the closest that I could possibly draw this trend line without actually cutting through a body. Like, I cut through this body here, but it's not a big deal because it's coming down. The candle is a bearish candle, but I haven't cut through any of the green candles bodies. The tails are okay, but not the bodies, right? Okay, I just want to make that clear. I'm going to save this drawing here so I don't inadvertently move it, and then we'll switch to the intraday. Okay, this is when I'm going to get into the recap here. We went right into the 147.05. We had an intraday pullback. This was a beautiful, absolutely beautiful intraday trade. The high of this candle was actually 147.04. It was 1 cent off. I think I covered this in the previous videos already. We broke through, we came back down, and now this became support. It was short-lived support. It just kind of small bounce over there. And then we just started, trading sideways along this 147.05 level. And then right at this high of this candle, which is 147.03, 2 cents off of the 147.05. We broke down, or they sold off on Thursday, and then we started trying to float up, trying to recover here. And then towards the end of the day on Friday, we just started breaking down. We bled out. Now, if you take notice here, as soon as we went into this upper trend line, this was the upper trend line that I just drew in. Okay, they saved it. They saved this trend line right here. Okay, so we kind of cut through it, but we did not close below it. Okay, so that's something that you definitely want to keep in mind. All right, until this guy breaks down on the intraday. Okay, we come down, and then we may retest this, and then if we break down again after the retest, then this will be a corrective move, in my opinion. This will be a pullback, at least on the 10-minute chart, unless they save it towards the end of the day, which is what they normally do without a federal manipulation. But we can't determine our trades based on federal manipulation, okay? And the reason for that is just that it's manipulation, so you don't know when they're going to save it, okay? But you can pretty much tell that they're not going to let this market go down at least until the election is over. I mean, they might let the markets kind of just bleed out a little bit, but they're going to try and hold it up as best as they possibly can. So I don't expect any type of crashes or flash crashes or anything like that. I expect pullbacks, but that's what you normally see in a healthy market anyway. Okay. Okay, so this is the hourly chart, and then again, this is the upper trend line that we were messing around with earlier. Okay, we kind of traded along here. We created this consolidation pattern. We broke out. This was the QE announcement, and then you had this shooting star, and we just bled out. Right, we went right into the 147.05 again. It could not hold that, meaning did not confirm above here, did not even confirm above here. You see how that worked? So we broke out of this 147.05. We were unable to close above this candle here. We created the shooting star and we just bled out here. And then we came down, and then as soon as we went back into this upper trend line here, it's any man's guess what's going to happen on Monday to see if they're going to save it off of this upper trend line or let it bleed out into this 144.30, which is another mathematically calculated level, in which case I think that the federal manipulation could potentially bounce it off of there if they don't save it here. Okay, so it really depends on how bad they want to save these markets. Okay. Alright, so what are the charts telling me? The charts are telling me that tomorrow, probably on Monday or Tuesday, Monday is a low volume day, we're going to see, okay, so charts are telling me if we get a breakout, a close now, the candle actually has to close above the 147.05. That looks bullish to me. This would then confirm the bullish consolidation pattern where you have this up move here. We kind of consolidate and then we have a higher move higher, I guess you could say, and this over here is a valid support line. Okay, now the pattern, now if it wasn't QE3, if there's, okay, let's just say there's no QE3 and strictly technical analysis, all right? We have this up move here, we break out. Normally what you'll see is a breakdown, all right? We close below the upper trend line here, which tells me that if we extend this trend line here, like so, I think I better make this a little nicer, but for now, if we break down below this trend line here, then my prediction for this market of how far this thing could potentially go after the breakout, depending where we break down, I should say, but let's just say we break down somewhere around here, then my prediction would be the breakdown would be around this level over here. Okay, and then what I'll do is see if I can calculate another level that falls around the same area, and that'll be the level that I will go long the market. Now, if we do not, let's see, our support levels are going to be obviously right here. We're going to find out if that's going to be support. We have this 144.30 mathematically calculated level as support, and we're also going to have this 141.95 level as support as well. That may coincide with the 50 moving average, which will give it a lot more strength as far as support goes. And we had previous resistance here, which was at the 141.58, which will also be used as support as well. So that's pretty much what the charts are telling me. I just have to kick back and watch and to see what happens next week, if we're going to be bullish or if we're going to be bearish. Okay. Now for the US dollar, this is the dollar futures chart. Let me just load the drawings up here. Oh, okay. Well, anyways, we had this mathematically calculated level here, which was $78.74. We got the low here of $78.73, so it was 1 cent off, and we got that bounce. Okay, now I did say that we're gonna find resistance here at this trend line here, which if I zoom out here, we have this this trend line here. I don't know why this thing isn't extended. I wonder what happened to this chart. But anyways, we have these two pivot points here, which confirms a trend, or which confirms that I can draw a trend line, I should say. Let me just delete these lines up here. I don't know why this chart did not save correctly. Just put that in there. Alright, anyways, we're going to get resistance here. We're also going to get resistance at the $80.61 level. But this resistance line was calculated all the way on this day here. I've since then recalculated this line. That doesn't mean it's not going to hold. It just means a recalculation was in order. And in which case the recalculation gave me an $81.26 level here. Okay, so there is a potential. I mean, I'm not saying we're just going to go straight into the 81.26. I mean, that's going to be pretty difficult with these moving averages in here. But if we can pierce through the 200, if we can pierce through the 20, okay, by the time we get into this 81.26, the 50 moving average is going to be right there. In which case, that's going to give a lot of resistance, and then I think the markets are going to go higher because the dollar is probably going to pull back, and we all know the dollar is inverse to the markets, right? So With that being said, I think we still have a little bit more ways to go on the dollar. It doesn't mean that we are. Why? Because we have this down move, and this could potentially, all right, potentially be a bearish consolidation pattern. Okay, if it's a bearish consolidation pattern, there is a potential that it may not hit resistance first before it pulls back. It could just pull back at any time, right? And because we've already bounced off the $78.74 level, when we do pull back, there's a potential that we may break down. If we do break down below the 78.24 level, then the next mathematically calculated level I have is the $76.38 level. And let me switch to the weekly, and I can show you why I think this is going to be very good support. Switching to the weekly chart for the US dollar futures, let me just zoom in here. We have this pivot point here, we have this pivot point here. Okay, this confirms a trend line, and then there you have it, right at the $76.38 level. So if we get there, I'm thinking that the 76.38 level will be pretty good support, in which case we'll get a bounce, and then at that time we'll probably see the markets pull back. Now this would probably happen because it's so far down. It'll probably, most likely in my opinion, happen after the elections, but what that remains to be seen. This is a little bit more longer term, but in the shorter term, let me switch back to the daily. This is what the charts are telling me. The charts are telling me we have resistance at this level here, so we do have a little bit more downside to see in the market, a little bit more of a pullback in the markets potentially. Okay, based on the dollar chart, we haven't hit resistance just yet. Okay, but what do I think? And normally, what I think is more is what I think is a lot. I fail a lot more than what technical analysis tells me. Basically, trade what you see, not what you think. But this is what I think. I just have to throw it out there that this could fail or drop at any time because it still looks like consolidation to me. So it doesn't mean it has to hit resistance before it falls, right? So in my opinion, that might happen. But what the charts are telling me is that this is resistance. We haven't gotten there yet, and because the dollar is inverse to the market still has a potential of pulling back a little bit more. Okay, now I'm going to quickly jump into other charts since I'm doing good on time. This is a chart of the USO, which is the ETF that tracks oil. All right. I talked about this in the previous video, so I'm just going to fly right through this. If you want to find out about USO, just look at the previous video. I still have support levels here at 33.11 and 31.08 for a bounce. We did come down. We are consolidating right under this 50 moving average and under the 20 moving average, which means give it a few more days, and this has a potential of getting into the 33.11 level, in which case it may start consolidating again before it comes down into 31.08 level. But that depends and remains to be seen with the federal manipulation to see if they actually save it at the 33.11 and then start going higher from there. But you can see that this was a rising wedge pattern, just like the SPY, and this pattern actually broke down like it's supposed to break down in a normal rising wedge pattern. And my predictive price was grabbed from right here, this pivot point here in this doji candle, and so this is from the breakdown here, which is around the 33.11 level. This tells me that I could potentially go long at the 33.11 level, and if we get a close below this level here, then I'll probably stop myself out. Okay. All right. This is a chart of the SCCO, which is Southern Copper. All right. Now here's an example of what I mean. This is not a rising wedge, but it's definitely a rising channel. Okay. This rising channel. I had this mathematically calculated level here at 35.55. All right, it actually broke through and confirmed, but then it just broke down after that. But you can see this is a perfect example of what I was talking about on how when you have a rising channel, a rising wedge, a rising triangle, or ascending triangle, or whatever the case may be, and you break above the resistance line here. Let me just delete these Fibonacci retracements, get a better idea of a better look of what I'm talking about here. Delete all these lines here. When you break above a rising anything, chances are you're gonna fail. Okay, and when you break back down into the channel, then there's a probability or a higher possibility that this pattern will play out, and when it does play out, it's going to play out in a very sour, strong way. But again, QE3, we just have to watch and see what happens. This last candle, which happened on Friday, was a big move down on high volume, so that confirms the price. However, keep this in mind now. Just keep this in mind. We've already had this down move. All right, when you have a down move like this and then you have a candle on high volume, this normally indicates a possible reversal. Okay, now this is the caveat. If this candle here was something like a hammer candle, then I would say we would definitely get a reversal simply because it was right on the 20 moving average. It's going to get a reversal, and it'll probably reverse back into this 35.55 level and then get a bounce, okay, or get a pullback and then continue on its merry way. However, the fact remains that this candle is not a hammer candle. Um, but let's just say it was the stock was trading this way as an example, and then we just broke down and we closed below the bottom of the support line here on higher volume. That tells me that this pattern is the start of the down move, okay, because there's high volume, right, on any type of breakout indicates the start of the down move, right? But we didn't get the candle, we didn't get the down move, so it's any man's guess or we got the down move on high volume, but the candle doesn't indicate a reversal. So it could mean two things. First, we got the down move, it was a big down move on high volume, that may continue down, okay? Because this wasn't a reversal candle, but it doesn't have to be a reversal candle, because we had this extended down move already on high volume, there's a potential that we may get a bounce. But even if we did get a bounce, I don't think it's going to pass this 135, I'm sorry, the 35.55 level. And if it does, I highly don't believe that it's going to pass this trend line here, because it now acts as resistance. So it may pierce this 135.55 level a little bit before having a pullback, and start trading either in this channel again or actually break down from the channel. But I just wanted to give you an example of any rising pattern, when you do break out of the upper trend line, what the result is, because this is a big, for the whole week, and before that there was just a sell off on SCCO. All right, this is a chart of the GLD, which is the ETF that tracks gold. All right, so I still have this level here at 174.29. Okay, that hasn't changed yet. We consolidated close to under it. Remember, I always say if you consolidate right under any level, it gives it a potential of breaking out. We actually got all the way up to the 173.19 level, which is about $1 off, before pulling back. I still think that gold has a potential of getting to the 174.29 and possibly even higher, because we did consolidate right under it. There is a possibility that we may actually punch right through it. But this looks like a healthy up move, consolidate, up move, consolidate, up move, consolidate again, up move, and then maybe potentially we have some sort of correction, a small correction, before heading higher again on gold. Okay, this is a chart of VMW, which is VMware. I had a level here at 104.41 that was created on this day over here. Okay, we got close to it. The high of this candle was 103.02, which was about a little over $1 off. I still think it has a potential of getting to this 104.41 before having a pullback. I may have to do a recalculation because it came close. With a stock that moves at 250 with a 250 ATR, this is pretty close already. So I'm gonna keep an eye on VMware. I kind of like VMware, maybe at this level over here for a pullback. But if it starts pulling back now, I mean, being that it's above all the moving averages, again, you want to go long, strong stocks. And right now, the stock is a pretty strong position. We have a low here, we have a higher low, we have highs, and we have just higher highs. Okay, so based on that, this is a strong stock. You want to go long on strong stocks and go short on weak stocks. Okay. All right, one chart I wanted to talk about is Apple. I love Apple. I'm an Apple fanatic. I got a MacBook Pro, I got a MacBook, I got a Mac Mini, I got a iPad first generation. I had all generations of iPhones except for the iPhone 5, actually, interestingly enough. But I am an Apple fan. But I have to say that the Apple chart looks a bit tired to me. Okay, yes, everybody's telling me to buy Apple. All my Apple friends, in fact, my friend works for Apple, and he's telling me to buy Apple. But he's not a short-term trader. Maybe in a long-term investment, I may buy Apple. But right now, I'm a trader, just like you, right? So we want to buy and sell Apple. We want to buy and sell anything. The reason why I am a little bit wary or weary or whatever you call it on Apple is this. Let me just load my ultimate oscillator here, and let me just show you something here. This is going to be a little bit interesting. We have a high here and we have a lower high on this ultimate oscillator. Okay, let me just zoom into this section here so you can see we have this high, okay, and then we have this lower high. What I see right now is divergence in Apple, where we'll grip this high over here, which is this candle, and then we draw a line straight to this candle here. That is an uptrend. Apple is making new highs or higher highs. The ultimate oscillator is saying that it's making new lows. This is called a divergence. When you have a divergence, be prepared for some sort of pullback or some sort of correction of some sort in any stock or ETF. The hard part is determining when that divergence is going to kick in. So a lot of technical analysis traders look for signals or signs like overbought or oversold situations. Hammer candles or shooting stars, depending on if you're bearish or bullish, or depending on where your divergence is telling you is happening, I guess. In addition to that, when you look at the volume here, the volume was definitely higher than the past 4 days. And again, you know me, if you watch my previous videos, as long as the volume is higher than the past 3 days, then that validates a possible reversal. This is not an up move per se, because it's more of a consolidation pattern. I would much have rather seen it go straight into this level here on this high volume on Friday, and then I would have determined that this is a reversal. But because we're kind of consolidating here, there's a possibility that we may go a little bit higher. This is somewhat of a spinning top candle. So what am I saying? I'm saying the technical analysis is telling me that Apple is tired and it's going to pull back. And if Apple pulls back, it's a big stock. I mean, it's a $700 stock. So if it pulls back, it's going to pull back like 20, 30 bucks at least, 50 bucks maybe. And that'll be healthy for Apple. But if you buy now, you'll probably okay. In my opinion, I would not buy Apple at $700. I would wait for a pullback first. Once that pullback happens, then I can go long, or then I would go long at Apple. But I would not short Apple right now either, because it's such an expensive stock. I mean, obviously, if I start selling shares of Apple, I won't be able to do very much. I would rather do this. This is the Qs. Apple moves, the Qs will move. So if I short Apple, which I'm very highly considering doing, then I'm going to short the Qs instead, because the Qs are a lot cheaper, and I can do a lot more on the Qs. But just also keep in mind that if Apple does pull back, and it's a substantial pullback, if the institutions don't jump in, there's going to be a lot of bloodshed, simply because Apple is the biggest stock of the SPY, or the S&P 500, right? And because SPY tracks the S&P 500, SPY will bleed out as well. So just keep that in mind, that even though Apple does sell off big, the institutions can jump right in there and either save Apple or save other bigger stocks within the SPY or the S&P 500 to keep the markets afloat until at least the election is over. Okay, well, anyways, I'm into 27 minutes already. I just would like to say thank you very much for stopping by and taking the time out to watch these videos. If you find these videos helpful, and you are making money off of this video, all I ask is maybe if you could do a good deed, walk an old lady across the street, do anything, give a penny, donate to somebody who needs food, or buy a McDonald's Happy Meal for somebody, or a McDonald's meal for somebody, or something. It doesn't matter what. This is your 27-minute market update. And God bless to you all. Thank you for watching, and I hope to see you in the next video.